Why do so many businesses founded by America's free market innovators reach such great size? One answer is our capital markets. Promising companies can sell shares to the public on our stock exchanges. These investment dollars have financed development of countless innovations that we just can't live without, from the iPhone to Amazon to Facebook and Google. One factor behind this explosion has been mutual funds, where people can easily invest in a group of stocks without having to be experts. The man who did more than almost anyone else to make these funds investor-friendly was John C. Bogle. John Bogle was born in New Jersey in 1929. His family was well-to-do until the stock market crashed and the Great Depression followed. The Bogles had to sell their home. The family fell in hard times and the parents divorced. The trauma deeply affected young Jack Bogle, and he realized the importance of financial management. To help make ends meet, the hard-working teenager delivered newspapers and worked at the post office. Bogle won a scholarship to Blair Academy and then to Princeton University in 1947. At that time, the field of mutual funds was still in its infancy. Stocks in a fund were curated by professional investors. The idea was that an expert financial manager would get you a better return on your investment. The young Bogle studied the numbers and concluded this wasn't true. In his senior thesis on the economic role of the investment company, he observed that while the stock market has its highs and lows, professional investors as a group can't get the returns that beat the long-term growth of market value. His thesis won him a job with Wellington Management Company. Bogle quickly rose to become president of Wellington in 1967. Then troubles came. There was a company merger that didn't work out. He lost his job, but went on to launch the Vanguard Group. Now, he could design the kind of fund outlined in his thesis, and without management by high-priced professionals, it could charge customers lower fees. In 1976, Bogle introduced the Vanguard 500 Index Fund, based on the Standard & Poor's 500 Index of leading publicly traded companies. It was the first index mutual fund for individual investors. Buying a share of this Vanguard fund meant, in effect, you had a piece of each of these companies. Yet the 500 didn't get off to the best start. It attracted only a meager investment and was mocked as Bogle's folly. Skeptics questioned the idea of aiming only for average market returns. Yet Bogle's investors soon discovered that, over time, these so-called average returns were actually better than what the professionals could get. And lower fees meant there was more money left in your account, and that money could grow. Today, Vanguard is the largest provider of mutual funds in the world. Bogle's story is another illustration of how free markets expand access to products and services once available only to the wealthy. Thanks largely to Vanguard's affordable investments, more than half of U.S. households own mutual funds. Many millions of individuals now have a stake in the U.S. economy and have prospered. John Bogle died at the age of 89 in 2019. I'm Steve Forbes.